everyone. Welcome to the final bar. Today, we will talk with Dave Landry of DaveLandry.com. We'll debrief on stocks like Meta gapping in a big way to the upside, growth over value with communication services up almost 6.5% today. Ladies and gentlemen, this is the final bar. Hello, everyone. Welcome to the final bar. I'm your host, Dave Keller. I'm the chief market strategist here at StockCharts.com in a sunny but cold Redmond, Washington. Thanks for joining us every weekday after the close as we break down the activity in the markets using the best practices of technical analysis. The technical toolkit is designed to help us understand the message of the markets by analyzing price and breadth and momentum, all those indicators that help us understand the dynamics underlying investor psychology, right? How are euphoria and desperation, excitement and panic projected into stock prices? You've seen quite a bit of confidence here recently in the month of January, continuing in February, stocks like Meta gapping in a big way to the upside. Still well below all-time highs. Let's be clear about that, with Meta still about 50% below its all-time high, but an impressive run today, impressive gap higher today after an impressive run off of the lows. So where are we at now as we've seen some of the short-term strength in some of these key areas of the market? We have a great guest today, Dave Landry, to help us sort of make sense of some of the short-term movements and think about some of the longer-term themes we've experienced so far in 2023. Let's continue on with our market recap today. As I mentioned, nice up move for growth stocks, and you can see that probably most clearly with the NASDAQ composite up over 3% today. That's one of the biggest gains we've seen certainly in quite some time. This is, one of the biggest gains in the NASDAQ composite ever, and a nice move to the upside. The S&P 500 about half of the upside gain, up about 1.5%. The Dow managing to be in the red. Talk about a dispersion between the NASDAQ and the Dow. It reminds me a lot of what we saw earlier in last year in 2022, but we saw the flip of that, right? We'd often see the NASDAQ down and the Dow up in a big way because it was things like energy, which are much more weighted in the Dow than something like the NASDAQ composite index. Here, we're very much in a growth over value type of feel. The sectors at the top, communication services, consumer discretionary, and technology, kind of those three FANG sectors. At the bottom of the list, energy down over 2% today. So when that's the difference between the growth stuff and things like energy, you're going to see the Dow down while the NASDAQ's up in a pretty major way. Mid caps and small caps are both having a pretty good day. And it's worth noting the small cap S&P 600 up 2.4% compared to the S&P's 1.5%. The VIX moving higher. And actually, I'm remembering when bringing Dave Landry on here in a little bit, one of the times he was on this show, I remember talking about the VIX because a lot of people think about the S&P, the VIX as being sort of inversely related, right? So if the S&P's up, volatility's down. If the S&P's down, volatility's up. And over time, in general, that has tended to be the relationship, but that's no guarantee by any means. So today you have the S&P up in a big way. You have the VIX up in a pretty big way as well, moving higher. So the VIX is less a inverse indicator for stocks, and it's more a measure of uncertainty. So the market moving higher with increased volatility. So conclude what you can from that, but that is a situation we're left with today. Other asset classes here very quickly. Interest rates moved around quite a bit, but at the end of the day, not much movement, particularly on the long end of the curve. So long bond yields up just a touch, 10-year yields pretty much where we ended the day yesterday. Now, interest rates came off quite a bit yesterday, and this was after the Fed meeting. And so settling into around 3.4% for the dollar sign TNX, which is the 10-year yield. The dollar moving higher today, and we've talked about that weaker dollar as being one of the great themes or one of the key changes that we saw in the fourth quarter of last year, which has continued into this year. A bit of a mean reversion on that trade so far, with the dollar up about 0.7% using the UUP ETF. Commodities all in the red, gold down 2%, silver 2.3%, crude oil prices down as well. So overall, this is very much a we'll call it paper over rocks, right? You have paper assets rising with hard assets like gold and commodities down today. Cryptocurrencies mixed technically, but for the most part, pretty positive still. Bitcoin and ETH are both moving higher. Ethereum up around 1680, briefly went above 1700 earlier today, and that might be an important move to watch. We've talked about that renewed strength in cryptocurrencies, and particularly being able to follow through after recent breakouts, which I think is one of the things that's different in the last couple months versus what we saw in the year before that. Let's look at a chart of the S&P 500 very quickly and just see what happened today. Obviously, a lot of movements. We have a bunch of earnings to try and get through. So I'll quickly get to some of the names and some of the companies that are in the news because of earnings releases. But just to start at a high level with the S&P, I mean, we've talked many times about trendline resistance, moving average resistance. The S&P has gone through all of those levels. The last line of defense, that last final line in the sand we talked about, was 4,100. Yesterday, we powered up through 4,100 after the Fed meeting. Today, we have a follow-through day. And what I mean by that is anytime you break a level, anytime you trade above resistance or close above resistance, and the same thing happens for support, my question is always, do you have follow-through? Which means the next opportunity, does the market continue in that direction and demonstrate that it was not just a fluke, not just a one-off thing, but something bigger, right? And the fact that there weren't just enough buyers to get us to resistance, but through resistance. And I would say a day like today, certainly seeming like that sort of follow through. You have the S&P trading up to almost 4,200 today. We're getting very, very close to the August highs around 4,300, which seemed like an obscurely high and absurdly high upside target back in October when we're making a new low around 3,500. But we're there. We're testing 4,200 today. And the fact that we're above 4,100 certainly in my mind clears the way to the August highs, which is sort of in the 43.25 range on the S&P 500, just about another 150 points above current levels at most. So overall, we're seeing renewed strength in stocks, in risk assets. The S&P 500 is very close to becoming overbought. It almost did it earlier today, and it might have gotten above 70 just briefly, but by today's close, it's just around 69. The last time we were overbought was in August of 2022. Now, before you say, well, this is obviously a top, go back to 2021 and the second half of 2020. You'll see when the market is in an uptrend, particularly an established uptrend, you will become overbought. It'll often be a short-term pullback after that. But overall, it's the strength of the trend that keeps propelling things onward and ever upward, as we say. To wrap up our market recap here, sector-wise, communication services number one up 6.5%. When Meta is up 23%, that's probably going to help the XLC do pretty well. We'll get to a couple of those charts individually here in a moment. The XLY, consumer discretionary, up 3%. Technology up 2.75%. The only sectors that were down today, energy, consumer staples, healthcare, and materials. And if you ask me, show me some charts that are not looking great while a bunch of other stocks are looking great, I would probably focus on three sectors: energy, consumer staples, and healthcare. So not surprising that those are at the bottom of the list as we see this sort of big rotation into some of the growthy stuff. Meta, obviously one of the biggest gainers on the planet today, and a nice move to the upside. It was up about 20% after hours during the earnings call. You have the sort of double whammy of projected strength through the course of this year after the company shrunk and having much tighter rein on expenses. A big share buyback that was announced that isn't going to hurt either, and never minimize the importance of big buybacks as having a nice upside catalyst for stocks. And we're seeing that yet again today. So we traded around 180, got up to almost 200 through the course of the day. It's up about 24% from where we were yesterday. So the 200-day moving average now far in the rearview mirror. The question is, what's next? I'm actually going to ask my guest here in a little bit, Dave Landry, how he would approach a name like this. If you weren't there and now you missed this gap, how do you analyze it now and how do you think of it? I mean, my back of the envelope is 180, now a pretty key level. As long as we hold that, then this is a breakout that is at least having momentum to the upside, and you're not seeing a lot of profit taking on that. A lot of times what happens, you have a gap higher and then you start to trade lower. And those are not particularly great charts in my experience, because that shows that everyone that was all excited to ride it higher is now kind of getting out of it. So we'll have to see what happens next, but certainly a big move to the upside. We have a couple other names that are reporting after the close today. Apple, and I should be clear, all of these moving higher in sort of in concert with all the other FANG sectors that are moving higher. But Apple getting above the 200-day moving average, which might be an important thing to watch for. Amazon closing above its 200-day moving average for the first time since almost a year, since March of last year. And finally, we have Alphabet gapping above its 200-day as well. So a lot of these names had some swing highs, which we'd not gotten above. And I know with Alphabet in particular, we're trading up to $100 a share. We're trading up to resistance. The question is, can we get through it? The answer of the market today is, yeah, we actually can get through it, and we're gapping above there. So big movements in a lot of these names, which opens up a bit of a question mark. Just briefly, as I wrap up the segment, there are stocks that are not working. I think it's also always important on a big update to look at the areas of the market that are showing a little bit of weakness. Look no further than healthcare. Merck, Eli Lilly, BMY, Bristol Myers, all reported earnings, all trading lower today. So there are areas of the market that are giving back some of the previous gains, which are rotating now into growth areas of the market like tech and consumer. Let's take a quick commercial break. We'll be back with Dave Landry of DaveLandry.com. We'll see you in a minute. Hello, everyone. Welcome back to the Final Bar. This is Dave Keller here at StockCharts.com. It is so good to have you join us every weekday after the close for our show. We have some exciting things to share with you once our studio is ready. We are working tirelessly to get things ready and doing a bunch of tests here to get ready. But a lot of really cool things happening planned for StockCharts TV and this show through the course of 2023. So definitely stay tuned. Couple quick announcements before we bring on today's guest, Dave Landry. First off, we welcome your questions. A lot of great parts of the show are the mailbag segments, which we run a couple times a week. We will do another one tomorrow. We'd love to feature one of your questions live on the air. Our email is thefinalbar@stockcharts.com. We're on Twitter @finalbarsctv. We are on YouTube. Put a comment below the video you're watching on our StockCharts YouTube channel. We'll hope to answer your question live on the air tomorrow. Go to StockChartsTV.com. That is our on-demand platform. We have so much great content. I'm so thankful for great guests like Dave Landry, like Sam Stovall, Katie Stockton, Jeff Hirsch. So many great conversations we've had in recent weeks as the markets have been more and more challenging, I feel like. All of those conversations are available for free at StockChartsTV.com or on your mobile device. Just search for StockCharts TV on demand. I am off tomorrow and Monday. I'm taking the family to Cleveland, Ohio to visit my folks and my brother and his family, which I'm excited about. Julius DeKempener, a very able and capable guest host, will be joining the show and riding things out for us. He will be taking your questions tomorrow, and also he'll be hosting the show on Monday. I'll be back with you live Tuesday, February 7th. My guest will be Ari Wald of Oppenheimer, one of our great guests and often very well-received guests. On Wednesday, the 8th, we have Joe Rabel, founder of Rabel Stock Research, host of a fantastic Q&A-based show here on StockCharts TV. I want to welcome on today's guest, Dave Landry. Dave's the founder of DaveLandry.com, coming to us from the New Orleans area. Dave, Happy New Year. Good to see you.
Thank you. Happy New Year to you too, Dave.
I appreciate you being willing to come on a crazy day. I feel like that's happened with you a number of times, and I'm starting to think that's you're the problem. I think
maybe so. I'm the common denominator.
You are. So I have to believe there's something there. But thanks for bringing some charts with you. Your first one is using a couple of the indicators that we have on our ACP platform. But help us make sense of this move higher we've seen in the S&P. What is the chart telling you?
Okay, the system here you're seeing is what I call the TFM 10% system. And my thinking, like a pure technician, is that if a market's going to lose 50% of its value, it's going to lose 10% first. So if it loses 10%, a good round number in the S&P 500, something that's a good round number, you might want to think about getting out. And so I have the buy line in here, which I call it, which is Landry percent of close in the ACP plugin, my plugin. Anyway, it's just 10% away from the 50-week closing high. And notice that it stayed flat for a long time. That's because we were an extended bear market. And then eventually and recently, it started catching up with price. And now price is back above it. So now we're within 10% of the 50-week closing high, which is also not too far away from the all-time closing high. So obviously, market's improving, and we need to start thinking about buying fairly soon. Now, I do follow other indicators and not indicators so much, but other things, other patterns of mine that will start signaling a lot sooner than this. But we could get a signal pretty quick. And what's interesting is it has a little lag built in, but that's okay when you get in these longer-term extended bear markets like we've been in for 2022. It just kind of keeps you out of trouble for a while. So definitely improving one day at a time. And we could get a buy signal here fairly soon. We need probably a couple more weeks, but the lows will have to remain above the 50-week moving average for that to happen.
Got it. So a buy signal as we break out, but it's not just that, it's getting above and having the low, the Landry light, which call, right, which is space between the low of the week and the 50-week simple moving average, right?
Right. And that's a whipsaw filter. And the genesis of this whole system, Ian McAfee, he used to, God bless his soul, a wonderful guy, but he used to call it the diaper change moment. And so the idea behind the system is to not so much to get you in the market, but to get you out of the market, although it does test out really nicely longer term, especially when you do have those longer term sell-offs. But yeah, this is definitely an encouraging sign, and we're definitely improving here for sure. I mean, it's been a process type of bottom. This type of system doesn't work well with an event type of bottom, but that's okay. There are other things that get you in. But this has been a nice kind of gradual, slow process bottom. You can call it head and shoulders. You can call it whatever you want. It's just taken a while for it to bottom out, which is fine.
Yeah, it's felt like a process for sure, right? I'd love to ask you while we're here, a name like Meta, right? We were talking before. I'm going into the close, and again, I know this was a crazy day. When you have a name like this that's gapped up so much, obviously a name a lot of people are watching. Let's say you missed this, right? And you weren't there, and all of a sudden it's up. A lot of people would look at this and say, all right, well, I missed the move. How do you approach a chart like this if you're looking at it today? And what would you be looking for? I mean, broadly speaking, as like an entry point.
Well, the way I trade, I look at something like Meta, and it tends to be very efficient. It tends to be wide and loose. Yeah. And so a day like today, I wouldn't get too excited one way or the other. I feel like you can't kiss all the women. And if you miss a move like this, you just have to go on and, find another one somewhere. Yeah. But for me, I think you were talking pre-market or pre-show. If that gap holds, that would definitely be a positive. 180. Yeah. Anything below 180, I would start to become concerned because it could be a one and done. Not that I go off feel, but it has a feel like a short panic in here. And once that kind of gets through the market, it's going to be hard for it to get follow through. So we're just going to have to wait and see. Now, if I had to trade it, I'd like to see it rally a little bit more, show that it could follow through, and then trade a pullback. But if you go way back on the chart, we do have a big gap way back in time, and you do have a lot of a little bit of overhead supply to get through. So I think it could bump into a little resistance here fairly soon.
Yeah. When another area to think about is energy, right? When you're looking at a day like today, so many things having a strong day, but the XLE down pretty good. Chevron, Kappa's one down about 5% today. When you're looking at a chart like this, we're made now a bit of a lower high, and now we're testing support. Do you see this as an opportunity to buy into an area of the market that's now showing a little bit of weakness, or is this an avoid for a particular reason in your mind?
This would be an avoid. You've got COP up here, but if you could, what's the energy XOP maybe or
XLE?
XLE. Yeah, same sort of pattern going on there. You've lost steam here. Okay, if you draw a horizontal line going back in time, you could see that we haven't made much forward progress on a net basis in quite a while. Yeah. So one thing you have to be careful of is fighting the last war. So the energy's kind of led us through the bear market, and now it looks like they're kind of topping out. And as I think you said pre-show or at the beginning of the show, it looks like the momentum is coming back in the value stocks, or the growth is coming back in the value stocks are starting to wane a little bit. So I would leave this alone. If anything, if it dropped a little further and begin to rally a little bit, I would look to possibly short it on one of my patterns, such as a bow tie or some other type of transitional type of pattern.
You mentioned the bow tie pattern. That's a 3 moving average pattern that's part of your ACP plugin. It's a beautiful, simple but beautiful trend following device. If people haven't seen it, another area I'd love to talk about is just we had the Fed obviously this week, big move yesterday, and a lot of anticipation, but then the market moves very quickly to the upside. In your process, how do you approach a day like yesterday where there's a lot of uncertainty and this huge potential catalyst? Is this a sit on your hands and see how things play out day, or do you sort of take positions going into it based on some inputs ahead of time? How do you approach it?
Well, I sort of wear 2 hats, okay? And the core methodology, which is my bread and butter, is longer term trend following. So I don't get too excited about all of these news events. I mean, I might drop an F-bomb if it goes against me, but if I have a setup, I'm going to take it whether there's news or not. Now, if I'm intraday trading, which I'm a little guilty of doing a little too much of, like yesterday morning, I didn't do a whole lot of trading and I was flat by the Fed announcement. I let it do its gyrations. I actually went to lunch while it did its gyrations and put alerts on my phone. And when I got an alert, then I came back to the office, and that kind of kept me out of trouble, kind of kept me from chasing my tail. And I followed the trend into the close. So if you are a short-term trader, you can't trade ahead of these big news events because you're going to get whacked sooner or later. Now, longer-term trading, if you look at a chart, like some of these stocks, it doesn't happen that often, but every now and then we'll catch one, we'll ride it for a couple of years, and you'll have 7 or 8 earning periods during that time. You just have to live through all that and Fed announcements and all kind of other stuff. And so I think the beauty of technical analysis, as you know, is you don't have to worry about all these things unless you're really short-term trading, and it can really whack you really bad.
Yeah, you wait for him to play out and sort of see what happens after that, right? Can we pivot and talk a little bit about crypto? Crypto has been an area of the market. Obviously, 2022 was a challenging year for many risk assets, but especially crypto.
Yeah.
You brought one with you, Kusama, which is one of the currencies that we track on here. Can you talk us through this chart? Because I think it represents sort of potential renewed strength, I believe, right?
Yeah, absolutely. The altcoins right now have been on fire, and they're all crap. God knows what they do or if they do anything, but they're all going straight up. And in a momentum market like that, sometimes you can just buy them going straight up. So something like this, if it has a meaningful breakout, even though I'm not a breakout player, I'll go ahead and take something like this. And lately, and you could actually do this on ACP, you could sort the pairs by the strongest. And if you look to buy the strongest, with a few caveats, make sure they're thick enough and all, but you could just stay in those stronger pairs and ride the trends. Now you have to use a heavy dose of money management. So like something like this, if it breaks out especially on like the cheaper altcoins, I've been using a 20% profit target. I haven't been factoring in volatility like I normally do. And then I'm going to bring that stop to break even when I hit that profit target and free roll, so to speak. So I've got like 10 on right now that have all done that. And I keep looking to put on more and more. And you're going to have a chair when the music stops. But right now, the momentum is just absolutely absurd in these altcoins. Don't put in more than you can afford to lose. I mean, I'm using an offshore account, and word one day I'm gonna wake up and they're going to be gone like some of the other exchanges. So tread lightly. I don't want to be the Judas goat that, sucks everybody in. But right now it's a wonderful momentum market. It's trading purely on emotions like we technicians love. And it's been a blast. Not that trading should be fun, but it's been a lot of fun. And I've really been enjoyed doing them. So I would keep an eye on these things and don't bet the forum again.
Yeah, when you're looking at some of the more widely followed coins, things like Bitcoin and Ether, a lot of people are I guess excited about the rally off the lows, and you have to acknowledge, right? It's going from 15,500 to over almost 24,000 here on Bitcoin has been a pretty impressive run. Now there have been a number of times in 2022 where you had these sort of little mini breakouts that just kept failing. Have you seen enough on the chart of Bitcoin and Ethereum to feel that this is part of a broader recovery? Or do you still feel like this is a keep your foot on the brake pedal type of market for cryptos?
No, I feel like it's happening, and the altcoins are taking off and everything. Now, of course, you're going to have to use proper money management and all this stuff, but it just seems like this is a sustainable move, at least for now in Bitcoin. Now, I would like to see us get out of the range. If you could move your cursor just a little bit so I can see it. You see a little range. We're kind of stuck in a bit of a sideways range. Looks like we're just kind of taking a pause, but we are at the top of the range. And I would like to see us get out of that range. Ethereum's looking pretty good in here too. So I think so far, at least, it's the real deal. But you can only predict so far out with technical analysis. You can only look so far ahead. So I think shorter term, I think these things are doing great. Will I turn in the long term? I don't know. And that's why I like those 10 positions or however many I'm in. I have stops in place just in case they don't keep on going. And if they do, I'll stay with them as long as they do.
Yeah, it's such an interesting thing. I haven't looked at the cryptocurrencies using some of your tools from your plugin. I'm wondering if, like with the bow tie indicator, if you've had that rotation. I don't know if you've had a chance to look at those, but I would imagine that would be one of the indications that the trend is really confirmed to the upside, right?
Oh, absolutely. And most of them are going pretty much straight up. If you go back to that KSM chart we were just looking at a second ago, one thing that, and I was a little late to the game, but something like the 230 EMA system, which was on the chart I sent you, that's okay. You're just looking for two lows above the moving average, and you're looking to enter above the high. And they all broke out from that, and you could use that moving average, that's fine. They all broke out from that, and they've been following through so far. So it's something that I really wasn't paying attention. That's the thing about markets. It's like as soon as you stop paying attention, they begin to take off. And I got brought back into crypto when they, a little bit later. Some of them were up 50% or 100%, but they just kept on going. So I would look at something like the bow ties, absolutely. The Landry light, meaning lows above the 30 EMA, and then some of these simple little systems like the 230 EMA system.
Yeah, and thanks for bringing the Landry light system for the S&P here and thinking about that potential break with the Landy percent of close. I think that's an interesting, nice potential sign if we can get the S&P above that the key moving average resistance. Dave, listen, it's awesome to see you. Thanks for bringing some charts with you and answering some questions about the markets. Be well and stay safe, and we'll talk to you again soon.
You too. Good seeing you, Dave. Thank you so much.
That's Dave Landry of DaveLandry.com coming to us from Louisiana. Great day. And I love being able to ask people like Dave just how you approach a week like this one. I feel like sometimes when I'm talking to someone like Dave, it's, sort of a normal week. Like, what does a normal week feel like? This feels like everything but, and it just before the show, we're talking about some of the charts and just things are happening so quickly going into through the course of the day. It's hard to get a read on things. What I like about it, I think of Dave as someone relatively short-term oriented. A lot of times when we're looking at the charts, the first chart he brought, good life lesson there, was a weekly chart of the S&P and really thinking about how much we've moved and what we would need to see to confirm that this is a nice constructive breakout pattern. Great take there, as always, from Dave Landry. We need to wrap the show, folks, and go to the 3 and 3. Let's talk about 3 charts in 3 minutes that tell the story of this market environment. Here's chart number 1. I was doing my monthly chart review earlier today with my Market Misbehavior Premium members and really talked a bit about this chart. This is what we call the new Dow theory. Charles Dow created this methodology of looking at Dow industrials and the Dow railroads over 100 years ago and used that as a way to think about the producers and the distributors within the economy, right? Are they both doing well? Are we seeing any sort of non-confirmation between them? We've adapted that into what we call the new Dow theory, which is looking at the S&P 500 representing the old economy, the NASDAQ composite representing the new economy. These are confirmed in a bullish mode when both of them have broken above resistance. And we've seen that here over the last week, coming out of the lows in December into January, rallying higher, both of them getting above their highs from the end of November. To me, that is a market showing strong conditions across the board, both the S&P and the NASDAQ. Chart number 2, looking at industrials. We think about areas of the market that are struggling here in the short term. It's things that are outside of those FANG sectors, right? In particular, things like healthcare, energy, even some industrials. This is John Deere, which was testing a new high here, testing 440 in the fourth quarter. Nice gap higher, but exhausted. What we might call that an exhaustion gap, right? At the end of a big move, one final gap higher and never really follows through. That gap is that high day, and we never sort of get above there. Now we're making lower highs. Now we're making lower lows. Now we're breaking through trend line support. Those are the areas of the market where I would think to start to get a little more defensive and start to lean away a little bit, because these are areas of the market showing that investors are selling and rotating elsewhere. Where are they rotating? Well, stocks like Meta, stocks like GWW, Align, all with nice moves higher today. I'm going to highlight a cruise line. And the reason why I'm highlighting Royal Caribbean, this is one of the top 10 stocks out of our entire large cap universe using the StockCharts scooter rankings. It has been a long time since we've had cruise lines sitting in the top 10 of our large cap scooter rankings, but we're there. Now, what's interesting about a chart like RCL, talk about a nice orderly advance off of the low in July of last year. Higher lows in August, a retest in the end of September, and then higher low again in December, breaking to new swing highs above both moving averages, making a nice breakout to the upside. The most bullish thing that a chart can do is go up. Certainly seems like travel, tourism, particularly cruise lines like Royal Caribbean, demonstrating that strength. Folks, that's a wrap for the show. I want to thank you so much for joining us every weekday after the close for the final bar. Special thank you to Dave Landry of DaveLandry.com joining us from New Orleans and sharing some charts and ideas with us. All of our previous interviews, as a reminder, are for free at StockChartsTV.com. For StockCharts.com in Redmond, Washington, I'm Dave Keller. Be well, be safe. We'll see you tomorrow. Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.